What happened in the spring statement? What do you need to know? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. On Wednesday the 26th of March 2025 we had the spring statement from Rachel Reeves, the current Chancellor. So what happened during our budget talk today? The spring statement. Was there any massive hits for our businesses and our rental properties? On a positive we can say there was no massive hits. There's a few things to probably just be aware of and a few updates to just keep you up to date with what's happening. But on a thankful note, it wasn't anything from a tax perspective anyway, too bad with what they have thrown out there. The main things that they concentrated on during this budget was very much about the spending side of things. They're looking at things such as the cuts to state welfare. They're looking at cuts to the civil service and an increase in defence spending. So they're very much trying to balance the books and see how they can work things out. One thing that was highlighted to me after the budget was very much that they are looking at closing the tax gap. So this is the amount that should be collected against the amount that is collected. And one of the areas they're looking at closing this gap is through the penalty system, which is going to be tweaked further over the period as we introduce things like making tax digital. This is going to be quite a stringent penalty system where non-payment, non-compliance is going to be penalised and there is going to be extra money that you're going to have to be paying, which does signify a very big jump in the fact that you need to be getting things right, you need to be paying things on time, and you need to be making sure you're managing your cash flow, your finances in your business. So what else happened during our spring statement? The national security has been one of the areas that they've really focused on in the spring statement, with a look at increasing the spending in this area up to 3%. So we are going to be finding ways where they're going to be trying to create some cash somewhere in the system to enable this spending to be made. Now they've moved on to kind of a reform sort of approach where they're looking at making it a pro-work ambition. So rather than people getting welfare, they're encouraged to get back to work, to be more productive within society, to help encourage working rather than just claiming benefits. The universal credit health element has been frozen for those already in it, and anyone who's coming in as a new claimant, it will be reduced compared to the existing claimants that are receiving it. The universal credit standard allowance is increasing though, so that will be moving upwards in line with inflation. However, there will be increased checks on the potential and new claimants to make sure that they are eligible and entitled to some of these benefits, to ensure that the welfare that is being paid to the right people. The government is very much looking for efficiencies within its systems, and NHS England is going through a change where they're getting rid of one area and moving it into another area to hopefully get different savings in the long run. So nothing directly related to what we're doing here, but this is all going to have an impact around the country and around what is happening in the economy, which has definitely got an impact on our property businesses. Growth was the other area that was focused on, and however much the growth is going to be less than it was before, they're still looking at growth. How this is going to be achieved is going to be an interesting thing to see as we see how this government progresses and what happens in future budgets, which we're expecting again another one, full one in the autumn. In terms of personal tax, we've had no changes to our tax rates, we've had no changes to our tax thresholds or bans since our October budget. So there's not really been anything significant that we need to note in this area just yet. We had some changes on the pension side of things in the October budget, but we've had no further changes in this area to note at present for the current one. So any plans you may have already had in place, then they are still going to be good to go ahead, and you may just need to consider anything before the October budget later, or autumn budget I should say, later in the year, when there may be further changes or tweaks as things continue to develop with the current government. There are some changes coming for non-UK domiciled individuals, and if you'd like me to go into more detail on that, please do leave a comment and I will see about putting a separate video on this more techie area of tax for those that may be impacted with these non-resident or non-domiciled individuals tax changes. For national insurance, we have got some changes coming in the coming weeks, with the increase of 13.8 to 15% for employers' national insurance. There is some videos on the channel on how that is going to impact, and also if you're a single director company where you're the only person receiving a salary, on the employer's national insurance you're going to be paying going forward. So do check those out. This is still going ahead and it is coming into operation from the 6th of April 2025. So make sure you're just aware of what's happening, to be aware of the additional cost if you've got employees in your business or if you are employing yourself in your own limited company, how that will be impacted. For those self-employed, there wasn't any specific changes going forward based on the spring statement. However, we should just highlight the fact that the 1,000 trading income allowance is going up to 3,000 from 2026. So this is meaning those that have part-time mini hobbies that have turned into cash generated businesses, but they're not really big businesses, it does mean that you potentially will not have to be reporting this income, which is great for those that have minimal things to report. It just means that you're not going to be caught out by a couple of £100 now. Moving on to employment side of things, and for any of you that have got employees in your property businesses, please just be aware that there is changes to the national minimum wage, and depending on their age you just need to make sure you are fitting in with those changes from the 6th of April 2025. Anyone with company car benefits, again those increases are kicking in from the 6th of April 2025, so just make sure you're aware of what the new benefit is, which if you're on electric cars is going up to 3% from 2%, and for anyone who's on a higher percentage, just make sure you're aware of exactly what is going to be the benefit that you're receiving going forward. Anyone with a company van, again the benefit is going up as of April 2025, so just make sure you're aware of what that benefit is going to be for you going forward, so you can just make sure you're aware of your tax position. Double cab pickups were a big thing in the October budget. There's been no further developments in the spring statement, so all those changes are going to be going ahead, and check out the separate videos on that which goes into a lot more detail on what is happening with those if you have one or if you were considering getting one. Capital gains tax. Thankfully there were no further developments in this area, which was always that risk whether she decided to do something a little different. So we've still got the same changes that we had back in October, where everything is going up to the 18 and the 24%, but no further movement on them at this point in time, which is great news for anyone who has been doing any planning and disposing or selling of any shares or properties in this period. We've had no changes to the annual exemption at this point, so we are still sitting at a 3,000 annual exemption, and that will go into the next tax year. We will see if there is any changes in this in the autumn budget, whether there's any reductions or increases as time goes on. The business asset disposal relief changes kick in from the 6th of April. So anyone who is in the process of getting a business or company sold needs to make sure that they get things in before the 5th of April to get the 10% tax rate. Anyone after that is going to be onto the 14% tax rate for next tax year, or for the following tax year it'll be up at the 18% tax rate for the first million, assuming it's a trading business. One thing to note, because I know I've got a lot of property investors that are following the channel, it does not apply to you if you have got an investment property business, but it does apply to you if you've got a trading business. So for example, if you've got a sourcing business that you're selling the sourcing business, or if you have a property management business, those ones are trading businesses. They would be allowable for this business asset disposal relief. A buy to hold property business will not have that same allowance. So it's just to be aware of this if you have got a trading element to your company's structure. Moving on to inheritance tax then, and again we've not really seen any changes at this point in time. This will likely be an area we cover further later in the year, depending what happens in this area in the autumn budget. Now, from a business's perspective, corporation tax has had no movements, and they have said that they're going to freeze that. The key thing that they have said is making tax digital is happening. We knew it was going to be happening, but it is definitely happening. And they've also added in that anyone over 20,000 is going to be coming in from April 2028. So this was an area we didn't know what was happening with those mandated over 20,000 rental income. We now have a date. So we now have 50,000 income, gross income, that's all your rents or all your self-employment or both together. Over 50,000, you will be in from April 26. Anyone over 30,000, you will be in from April 27. And anyone over 20,000 will now be in from April 28. So we now have a little bit of certainty in our lives. Whether we wanted that certainty or not is a different question, but we know what is happening over the next 3-4 years to get us in. Check out further videos on this as we go into more detail on the Making Tax Digital, as we need to get registered, as we need to move things forward to make sure that you are up to date and you know what you need to be doing. Some final bits and pieces then, just to cover off some of the admin, oddities and things like that. We know that the VAT threshold has not changed, so those in serviced accommodation or sourcing or property lettings, that is still 90,000 registration limit, and that has not changed. In terms of VAT, the other thing to just mention is that the VAT on private school fees, that is all going ahead. No further developments on that in the spring statement. So if you do have children in private schools, you just need to be aware of those extra costs that it is now going to be incurring. A few practical things then. We've obviously already mentioned today about the penalties side of things, and this is an area they're looking at developing to get penalties encouraging behaviour, which means if you're not doing something, penalties will arise to encourage you to do the behaviour that they would like you to be doing. The other side of things is they're not going to be making it as easy as we had hoped with Making Tax Digital. Historically, there was an expectation that there would be something available to submit the final declaration through an HMRC tool or software, like you can do your tax return with you. At this point in time, to do your final declaration after your quarterly submissions, you are going to need some sort of software to enable you to do this. Therefore, I would be suggesting you speak to your accountants to hopefully see how that's going to fit together for you as you approach your implementation date for the Making Tax Digital. Check out the extra videos on Making Tax Digital. We'll be going into a lot more detail as we know more and more from the practical application of what is happening and who is going to be going in, so that you can be making sure you get it right. As you can hopefully hear today, there has been no major changes in the spring statement. The main thing from my point of view has been we've had confirmation about the Making Tax Digital side of things for our 20,000 and over, which gives us clarity which we did not have before. So hopefully that is a welcome relief for most of us, that we've not got any major changes kicking in. We already know what the major changes are, so it is fine. We can just move forward with what we already knew and hopefully have a good year and see what comes in our autumn statement later in the year, which there will likely be some more bigger impact on our businesses. Hopefully today you've discovered what happened in the spring statement and what you need to know for your property business. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing. Let's make tax less taxing.